This is Digget Shovels case. We are now going to look at periodic Fifo. Okay, and again, this case can be found at the bottom of this videos, and if you haven't looked at it already, you should print and review it. So the question is, I've connoitered or I've moved around some of this data. I've presented it a little bit differently because under a periodic system, periodic. There. Under a periodic system, we don't really care of the orders of the sales versus the purchases. We basically assume under a periodic system that all the purchases happen. We had all the inventory is there, and then we sell it at the very last minute. So if we were going to record the sales transaction, that original sales transaction that happened, the 70 units, we would have recorded accounts receivable of the 2,800 and the sales of 2,800, and we would have ignored doing the cost of goods sold under the periodic system. And similarly, for sale number 2, we would have had that we sold 80 units. We would record accounts receivable of 3,200 and sales of 3,200. So those are the journal entries with regard to the sales transactions. But we need then to do another transaction at the end of the year to calculate our cost of goods sold. There's a couple ways we're going to do this. I'm going to approach it first. I'm going to focus on costs of goods sold, and that kind of, because it really emphasizes the whole point of kind of what's going on with FIFO. So if I had sold, and I believe that was 70 and 80, we sold 150 units in total. So if I'm focusing on just the cost of goods sold number, what am I looking at here? Well, I sold 150 units. I'm at the very end of the year. So I'm at the very end of the year, and now I'm going to do my look back. And since I'm FIFO, I'm going to start at the top of the list and work my way down. And these are the ones I'm going to assume that are sold. So I'm going to assume all of the 130 units at $15 a unit were sold for $1,950. I need another 20 units, so I am going to then assume that the other units that were sold were 20 units at $18 a unit for $360. So if I do it this way, I can calculate that my cost of goods sold is $23.10. The other way to think about this is to look at what we have in ending inventory. Okay, and under a periodic system, this is typically the way the folks look at it. But I want you to be comfortable with using either method to calculate the cost of goods sold. So if I'm using the ending inventory approach, well, I'm going to know that all these are gone because I sold them all. And of these 50, I only have 30 of those left. So under the ending inventory approach, I have 30 of the units at $18 a unit, and I believe that is 540. I have all 100 at $20 a unit, which is $2,000, and I have 35 at $24 a unit, that's $840. If I add all this up, I'm going to get an ending inventory of 3,380. Okay. One other piece of information I want to throw out to you is, and that should be a C, not a B. C is how much were my purchases. So I purchased 50 during the year. I purchased 50 at 18 for 900. I purchased 100 at 20 for 2,000. And I purchased 35 at 24 for 840. So my actual purchases for the year are a total of 1940. Okay, so here's one way to calculate cost of goods sold. Just look into the table and pull the number right out. Another way to do it is to use all the data we have. So let's think about the journal entry that typically happens under a periodic system. Well, we take our ending inventory and put it on the books. So we're going to say inventory end, and we're going to put that on the books, and that's $33.80. We're going to debit the account. Sorry, I shouldn't say on the books. We're going to debit the account. I'm going to show the inventory beginning as a credit, and my inventory beginning was a credit, was that $19.50. I am then going to close out the purchases account. When I actually purchased the inventory, what would have been my journal entry? Do you remember? I would have recorded it as purchases and accounts payable every time I made a purchase. Okay, so if that's a debit, when I originally purchased the things, I need to now credit them to close out the purchases account. So I'm going to credit it for $19.40. And then my cost of goods sold is my plug number. And again, I don't like to use the word plug, but it fits so well, is $23.10. And that doesn't look right because my purchases weren't $19.40. I can see the math here is wrong. And I know the math is wrong because I just looked at it. So this is not, I don't know what I wrote here, but this is $37.40. Excuse me, $3,740. It's okay to make mistakes. It's just when you recognize them, fix them. So I need to then erase this $19.40 here. Okay. So that's $37.40. So now that journal entry looks right? Yeah. Now it's good. So that's my journal entry that I would make under periodic FIFO. Now let's do the last piece here. My sales, again, the sales are going to be $6,000. My cost of goods sold, I know, is $23.10. My gross profit is going to be $36.90. And my inventory, which my ending inventory is $3,380. Okay. Now, we did all this without number 4. This is all without number 4. But you can see just kind of by looking at this, how would this change? Well, here's purchase number 4, right? So if let's say I had go ahead and made purchase number 4, right? Let's say I had made it. Okay. Well, my look back window now isn't after number 3, my look back window now, I'm at the end of the year, I've had purchase number 4, now I'm going to do my look back, and I'm going to look back up here. It still does not affect the income statement because those items we're selling are the oldest items that are on our books. Okay, so the only effect then that purchase with number 4, with number 4, I am racer happy here. With number 4, the only thing is that additional $1,800 goes into my inventory. So that will be $5,180 now in inventory with number 4. And that's the only effect. So let's go ahead and drop this information into our table. Table number 35 right here. So we've done our periodic FIFO, and we know that our cost of goods sold is, let's change colors, $23.10. We know, and that's with and without purchase number 4, because cost of goods sold does not change. My gross profit with and without purchase number 4 does not change. The only thing that changes is my ending inventory, 3380, but it doesn't differ from periodic from perpetual FIFO. So you can see that perpetual FIFO and periodic FIFO are not different. They are exactly the same. So I bet you can guess what's going to happen in our next video and final video, because we've been working all through this and nothing's really changed. We're going to see how periodic LIFO affects net income.